Arnaud is with us today. Hi, Arnaud, how are you? And Arnaud's
Hey,
been very
Bill.
right about the market for the last 6, 7 months. He's been constructive and
Thank you.
bullish. And his last interview with us, he was talking either 5,100 or 5,200 sometime around the spring for that to be it. Great Elliott work, Arnaud.
Thank
Uh,
you.
yeah, nice to have you back. Am
Yeah,
I
yeah, yeah.
am I recalling your narrative correctly?
Yeah, I think so. Let me
Okay. I
share
only
my.
talked to like 10,000 people. So, but I usually remember, kind of at least the take and where you were at. But I think you had a chart. Was it 5,100 last time or 52?
I had about. It's actually here on this slide. I thought I'd prepare a couple of
Okay,
slides, and this is to refresh
cool.
our memory because as we say, right, you're only as good as your last trade. So
Yeah,
have a look at how good I was, so to say, last time, and um, we also know nobody knows it all the time, right? So back then I
right.
was looking at we had a swipe breath thrust. That was the talk of the town at the moment. And all those swipe breath thrusts, I think I showed data going back all the way to the 1940s that the market would go higher. But there were events that showed that the market would erase most or some of its gains before it would move higher. So it kind of like got very overbought due to that breath thrust, and then it would drop and then ran. Well, that fitted with the short-term idea I had of a short-term wave one, wave two setup, but it didn't materialize. As we all know, unless you've been living under a rock, the market has been up, I think, 14 out of 16 weeks, which is unprecedented. I think it hasn't happened since the 1970s at least. And that's really something. So then we looked at seasonality, and it had an important low in October 26, 27.
Yep,
It said on average that nailed it, right? Absolutely nailed it.
yep.
It had some weakness in November and December. It didn't really materialize, but there was, of course, a little bit of weakness in December and November. But the alignment,
Moving sideways was considered weakness.
yes, in this rally it was.
Yeah,
So I think we
yeah.
got the two pluses and one minus so far. So far so good. And then I said we have a rally to at least 4803 for a B wave, which I had actually already forecasted in October the year before. So not too shabby when we were at the mid 3000s, right? So not too shabby. I give it a plus minus because I said it could also go to 5,014.34 ish, somewhere around there.
Which
Well, we
it's
got the
done.
we have 5,048.
Okay.
I redid some of my math. I really increased the numbers behind the comma, so to say, and it should have been 5,048, and that's exactly what we reached. So that could have been it for a fifth
You're
wave.
a little soft,
And
Arno. If you could turn your mic up a little, give us a little more volume. Is it possible?
yeah, this better?
Yeah. Go ahead.
All right. All right. So I think we got that pretty wrong. And we said, we're going to go to 5,014.34 if our preferred B wave count was wrong. So that was wrong in the sense that we misinterpreted the price data from the 2020 low. Now, I always say what we do is, we communicate the potentials, not the certainties. All we see is potentials in the market, and that's what we communicate. And if there were only certainties, why would we even have stop losses in place, right? Then we wouldn't have any stop losses necessary or any stops, and everything would always be green and everything would always be a winner. And that's, of course, impossible. So all we do with our work and any analyst is anticipate, we monitor and adjust. Whatever data we use, previous data, market breadth data, sentiment data, you name it, from that we make an anticipation and then we monitor, of course, if that's going to happen or not. And if not, then we adjust. And that's pretty much all we do. So I think everybody is most of the time, in that sense, it's around 70% reliable because there are times things just don't work. That's just the way it is.
Okay.
And we just show potentials. The nice thing is with the Elliott wave, for people that don't know the Elliott wave, you have price levels to watch. Below or above, one door closes an option or a potential, and another door opens. That's always how it works. So if we're in a consolidation mode, you go, well, if we break down, just like technical analysis, this is the price level we're going to go. If we break out, we're going to go into an impulse for wave 3, 4, and 5. And that's the nice thing with the Arnout wave, and that is very doable with trading. You can apply it very nicely to trade. And then I thought, I'm going to show stuff that hasn't worked so far this year. So this is, remember we said seasonality worked pretty well last year, and seasonality had a low October 26th to 27th. It was on the dot, unbelievable. So this is seasonality for a average year in the S&P 500. I believe this is 96 years of data. It's all data. Some people present data from other time frames, 25 years or 50 years, but I think we should include everything. Otherwise, it's so cherry picking. And so far, seasonality hasn't worked really well. As you can see, we, of course, dropped the first 5 days of January. And the whole Santa Claus rally became a bust. So it already made people quite bearish about the stock market. And here we are, right? So wrong as that seasonality was. And as you can see, we didn't really nail any of the tops and bottoms. It's quite in inverse. It was supposed to be a high early November or January. We got a low. We have to have a low here, and we had a high. We had a high here.
So things are inverting.
Yeah, things are inverting. So there you go. So, this is not really working.
I know you're an Elliotician, but I know you probably think and have heard of other things. Are you familiar with the Hindenburg omen?
Yes, I am.
Signal. Okay,
it's a rare signal. Yes.
Yeah. We're on one.
We got it. We got one about a week or so ago, maybe 2.
Yeah.
Singular signals are not as strong as a cluster of signals. I would really like to see a cluster of signals. I can actually pull up a chart because I have it on the chart. Let's see here. So this is all the Hindenburg omens since the 2009 low. And we got one here in early January. And as you can see, it's often a little bit stronger when we have clusters of signals. So several in a row, but not always. As you can see here, we had clusters. Sometimes the market can just ignore it. Yeah. And walls straight out.
Nothing works all the time.
Exactly. And that was my point with seasonality. It's not working. It worked last year really good. So if I then only going to look at election years, right? We're in an election year. So then we'll just move this one up. This is election year.
Are you who are you voting for? I know you're in Canada, so it doesn't count.
No, I'm in California.
Oh, that's right. You're in California.
Yeah.
Well, then your vote doesn't matter because we know which way the state goes, right?
Yeah. Yes.
Right.
Well, I'm not a Democrat nor a Republican.
Yeah. What are you? You're a traitor. Traitor. I'm kidding.
Yeah.
Anyway,
I have no problem with my political affiliation. I would support Kennedy.
Okay.
Anyway, so this is then all the election years. So of all those 100 years of data, we parse out the election years only, and neither that one has been working well. This is all 25 election years over the last 100 years, because an election is on average every 4 years, right?
Yeah.
Hasn't really been working either. Supposedly, the market is pretty much flat through May with a little bit ups and downs. So seasonality right now is just not working. And that just shows, like you said, it's not working all the time. 60% of the time, it works all the time. It's the famous quote. So that's not working. So I don't know what to do with seasonality. Some people say it's working. I don't see it. Anyway, the other thing it's not working here is, for example, a market breadth indicator. That has been, this is the summation index of the McClellan oscillator. Let me increase the size of the screen here for you. So it's the summation index of the McClellan oscillator. And it's been negative, and I think it's been pointed out by a lot of market experts that market breadth has been horrible pretty much the whole year, which is only 2 months, but the whole year has been horrible. Like everything is declining, but the market keeps on going up. The Magnificent Seven are just holding up the market. And some people are denying it, and other people are confirming it. But in fact, it's true. This is the summation index of the McClellan oscillator. And the McClellan oscillator pretty much measures how many stocks are advancing versus declining. and it's negative. That means more stocks are declining than advancing. So this summation index has been on the sell ever since the start of this year. So if you use this one for your buying and selling, right? So here's a buy signal in early November, and then you would have sold here early January. You would have had really nice gains.
Yeah.
Here
Right.
you would have sold in August, and then pretty much get back into the market either here in October with a little bit of a false signal, and then again in November, and you'd be doing pretty well on the short side, pretty good well on the long side. Doesn't work all the time. And now you would be out. You're missing this entire rally. So what's going on? Well, we've had it before in May and June of last year, where the market just went higher on negative breath. So we might see something similarly. We're getting quite oversold already. And I always see this, this is the relative strength indicator of the summation index as a ebb and flow of the indicator. So here we're flooding
Could the
really
market
hard.
move down with that recovering, Arno? Because it's oversold?
Yeah,
Just
it
like the
just,
market went up with it going down, could that oversold reading in the summation index recover and the market still move lower?
I haven't seen many examples of improving breadth in a market that goes lower. I don't
Okay.
think there are many. If
Okay.
market breadth goes up, the market pretty much goes up. But it can go down,
Got it.
it can go up with decreasing market breadth because only a few stocks that are heavily weighted in these price-weighted indexes keep pretty much the Nvidias and the mega cap
Well,
stocks like Microsoft and Meta
yeah.
are
Yeah.
doing
It's
their
not
job.
quite as oversold as it was in October or
No, it's not.
September.
So we can still get more oversold, but at some point, once we're really oversold, we're going to see at least a counter trend rally. We don't have to see necessarily a rally to new all-time highs. And with that, I think you can kind of show things don't work all the time, right? That's the whole point of it. Seasonality right now is not working, so we can't really use it. This is not really working. It kind of suggests that we should go lower, but yeah, we've been lower for the last few days, but it's minimal. We just came off all-time high. So this kind of brings me to the Elliott wave that we're tracking. And this is the short-term Elliott wave count for the S&P 500. We start here in January, and we're counting so far what looks like 5 waves up from the early January. 1, 2, 3, 4, and 5. Okay, so this rally here has completed. That we're quite certain of. And now we're either in a corrective phase or in a impulse phase. I don't know yet, but we did get 5 waves lower here. As you can see, 1, 2, 3, 4, 5. These are hourly candles, so every candle reflects 65 minutes. So you have 7 65-minute periods, I believe, per day. So you
Okay.
have equal spacing. And then we got most likely just a bounce, and we're now in a continued correction. But we don't know yet if it's going to turn into a full-blown impulse lower, as you see here on the right, 1, 2, 3, 4, 5, or we're only going to see an ABC, so 5 to 5 correction, something like that. If we see only 3 waves lower, then that's another 4th wave and another 5th wave. Or we have completed this entire rally since October. I don't know. The problem here is this relentless rally that we've had since the October low doesn't lend itself very well for Elliott wave because there's so few pullbacks. It's hard to know which pullback is what in the wave count. If I had gotten here more than one down day, because all we got here was one down day.
Yeah. Yeah.
if we got at least another one, please, it would have been really nice. So it's kind of uncertain if this is really a 2. It's very tiny. That's the problem.
Yeah.
It's so tiny. It's hard to
It's very
assess.
small too. And twos could retrace almost 100% of ones, can't they?
Oh, absolutely. Normally, this wave 2, and that's what I was looking for back in November when we last talked, was to go back to about 4,200, somewhere around here, and then we blast off. We didn't get it. All we got is one down day, and that's quite impressive and also uncommon. And then we just continued higher. And
where's that gap, Arno? The gap when 2 got underway, there's a daily gap that's pretty big, right above the two going into the little 3. Yeah, see that gap?
Yeah, that one is at about 44, 60 or 55 ish, somewhere around there.
Interesting.
44.
Okay.
Yeah. So that one can get filled. There's a gap here at around 43.25. There's a gap here at about 42.75. So there are quite some substantial gaps that
Okay.
might or might not get filled, right? We don't know. So,
Yeah,
but
we
for
don't.
now, we're either uh, thinking of a short-term correction and then one more move higher, or we've already completed the entire rally that started in October, and we're ready for a much larger correction. And that larger correction is, for example, here on the regular Nasdaq, a around 15 plus or minus 5% correction before we see another rally, because the Nasdaq just hasn't done 5 waves up since its low made in 2022. We did get 5 waves up since its low in December, but that was a higher low. So we don't
So
know yet.
that does that leave open that this could be the top in the S&Ps, but
Yes, it could be.
S&Ps won't make new highs even if the Nasdaq is a 4 with a 5 to come.
Correct. That is very possible. Yes.
Okay.
We
That would
could.
really be a curveball for a lot of people.
Yeah. Absolutely. We should not apply the same wave count to every index. For example, yesterday the S&P 500 stayed above last week's low,
Yeah,
but the Nasdaq, it's a little
took
hard
it
to
out.
see, took it out already. So the Nasdaq's already further along, or in a different wave count. I don't know yet.
Okay.
So this is an option that we're just going to bottom a little bit lower. I think the futures market are already a little bit lower.
You know what's
Not too
great
much.
about you, Arno? And you don't,
No.
I've interviewed a lot of people, and a lot of
Yeah.
people don't use that expression much. And I've heard you use it multiple times. I don't know yet.
Yes.
I don't know yet,
No.
because people are uncomfortable because they think they should know all the time.
Well, then that
And
would be great, wouldn't it? Then Wall Street wouldn't have to hire
but they
multiple.
pretend they know all the time, and they don't know.
Oh, no,
I
no.
mean, it's an uncomfortable feeling for many earlier in their career to say, I don't know.
Absolutely. Absolutely. Yeah, yeah. We always want to know and think that if we give an answer, then we come across
Yeah,
as more
yeah, make
more
something up. Yeah,
makes it. No, we're not going to make
yeah,
anything up. But that's why we use these price levels. So on every chart, I have these colored price levels. These are called
yeah,
invalidation or warning levels. So
yeah.
we have blue, gray, orange, and red. So the warning levels are here. So this is a bearish wave count, right? So we're looking lower. So we have a bearish wave count. So the bears are going to be in trouble. Um, if we start breaking, for example, back above 5,000, right?
Yeah.
But the bulls
And
will be in
that could
trouble.
happen tonight after Nvidia if they come in
Oh,
with
absolutely.
great
Yes,
numbers.
absolutely. So those are always the warning levels we use on all time frames.
Yeah.
So here, for example, you see the first warning level for the bears, that meaning we're not going to go lower. And it's just a first one, right? The ultimate one is, of course, the all-time high. Above the all-time high, this bearish wave count is completely off the table. And then we simply move to the bullish wave count.
So if we get
And
a
then,
bullish earnings report from Nvidia, stay on that chart, we could rally into that gap that you have under. I'm not sure. It may have been from last week. That gap lower Monday. See the gap?
oh, yes, absolutely. Yes. It's about,
Where's
I
that
think,
filled?
little north of 5,000.
Okay.
So there's only
Yeah,
25 points from yesterday's close.
that might be a good place to sell a rally if Nvidia carries the market higher initially.
Oh, absolutely. We
Okay,
could have
just
an
you gave me some ideas today.
we could see a bounce, so like a 1, 2, and then 3, 4, and 5
Yeah.
lower. Absolutely.
Okay. Yeah. Do you pay
So
attention to VIX at all?
I look at
It's
it from a higher low perspective. Are we starting to make higher lows while the stock market is making higher highs? Then I think it's
yeah.
a good sign
That
that we
was
can.
what I was going to ask, but that was
Ah,
kind of a tell to me that we were parabolic in the market and the VIX wasn't making lower lows, kept making higher lows.
correct. And it wasn't. It's been slowly moving up, I think, over the last 3 months. I think it bottomed out some December last year. and it's slowly been building its base. And oftentimes that's a good sign that the market is anticipating correction, because nothing goes up forever. So those are pretty much the two main wave counts we're tracking. From a bigger picture perspective, as I said, well, we could still rally immediately if we break above the all-time high quite immediately. But are we going to see just a small rally and then a bigger correction? And then the other question is this just a correction and then move higher? Or is this already the end of the bull market? And the closer we're going to get...
What's your gut tell you?
I think the technology sector could try for another big rally, and the S&P 500 might just see a bounce and not be able to make a new all-time high. That could be a scenario. So that the
great work, Arnout.
Thank you. So then the last chart I wanted to share is the Dow Jones, some bigger picture. Why? Because this is a chart going back to 2014. You can see the wave count. We only have so far 3 waves up since 2022. That is still corrective. So we could be in what we call an irregular wave. Irregular. It's still very possible. And I also want to point out this nasty negative divergence developing on the relative strength indicator. I know
it's had the weakest RSI structure compared to the other indices.
Oh, absolutely. And that's not a healthy sign. It can always be erased and just taken care of. The market can do it. But it's a condition, not a trigger. Because we've had this divergence for years. So it's a condition, not a trigger. But we have to take note of it. So this is a possibility. Loud and clear. Anybody can see this is only 3 waves up, with the B wave here in black, also an irregular B. So we had an A, B, C. So it's a 3, 3, 5. So it's a flat B wave. And now a larger B wave. So this blue B wave is kind of like this red B wave. And then a C wave. Only
someone saying, one of our attendees, Khalid, is saying, just like 2008, all indices are in irregular Bs.
Oh, yeah, it's possible. It's possible. We still only have 3 waves up on the Dow Jones since the October 2022 low. And this is another possibility I wanted to show, bigger pictures, the Dow Jones. This is not applicable to the S&P 500, not applicable to the NASDAQ, the NASDAQ 100, or the semiconductors. And of course, the Russell 2000 is completely on its own. Just to show for the Dow Jones that this 3, has moved a little bit. We could even be in a large ending diagonal. 3, 4, and 5. Yeah.
3 drives to a top. Same thing.
Yeah, same thing. So this is very possible. It would kind of fit-ish, I think, with the year. But also here, note all this negative divergence we're seeing on the RSI, on the MACD, on the PMO indicator, on the money flow here on the bottom. You see it, how much higher we are in the market, but less and less money is flowing in, and liquidity drives markets. And
where does 4 come in on the Dow?
4 would come in at around 35,500 plus or minus 500, somewhere around there.
So that's where are we at now? 38?
38, yes. So it's a 3,000 point drop.
10% about.
10%, which is a nice garden variety correction. And we haven't seen one since October last year. So we're kind of due for one. We can still go a little bit higher first. It all depends, of course, how do you draw the trend line, and is the trend line as is what the market is.
Use a thicker pen. It touches. So C is over. Can you do that for me?
Sure. Smear it over. There you go. Because we can still go a little bit higher if we use that 4 or 5 sequence. We could also see it in the Dow Jones. Still a little bit of 4 and a 5. And that would get us a little bit higher, I would say, to about 39,500. So another 1,000 points added, and then a decline. So this is possible. But again, these divergences are nauseating. There's still only potential. Right. It's not been confirmed. Though for the money flow, certainly confirmed. This is quite bad.
Thanks for sharing your work today, Arnout.
Yeah, you're welcome. So that's pretty much really, well, that's stop losses. All I have to share for today. So I hope it fitted within the 30 minutes.
Yeah, it was great. Yeah, and interesting looks. And I want to thank you. We've been doing this for years together. Feel
Yes,
like
we have.
we're friends. How do people follow you? I know your X handle, but maybe put up your website
Yeah,
so
they can go
people
to
can.
my website, sign up for my services, so they can get daily this type of analysis that we just went over. It's on intelligentinvesting.market. Um, Click on the menu and pick any membership you'd like to try. You get 50% off for the first month. If you don't like it, then just click on unsubscribe. That's really it. You got to give it a try. And Elliott Wave is not for everyone. And if you don't like Elliott Wave, we also have our trading alert service. You will just get a trading alert every day for the S&P 500 based on my trading systems. Those are, just simple mechanic trends and strength following and price following trading systems. And last year we had some really great returns on the short term, up almost 60% on the combined for the S&P 500 and the NASDAQ 100. So that's really good. I'm not saying we're market beating, but we get good returns. I think for this year, we're up about 5 to 7% on the trading systems on the short term. So that
I
works
know
really
it's
well.
not your area anymore, but I'm getting one question about gold. Can you share anything that you think?
Sure. Yeah, I do follow gold as well. And
But I thought you had someone else in your company doing it, but just a
used
quick,
to,
okay.
used to. Uh,
All right.
Thanks to California's uh, new rule, I cannot hire contractors anymore.
Okay.
So, yeah, that's great because
Yeah,
contractors are.
I tell you.
Anyway, so this is a gold chart, and so I have to do it myself. I just don't have the means to pay somebody a full salary and all that stuff. Um, anyway, so this is the wave count we're kind of tracking that we've topped here for a wave one in April last year. We had a deep wave two into October, another wave one here. So we had a 1-2 setup, 1-2 setup, and we're soon going to launch into a third of a third wave. That is kind of this is GLD, which tracks, of course, gold, the GLD
Where's
ETF.
C equal A? Eight, and this is GLD. This is so the numbers are
Yes,
different.
a little bit different. So C equals A at around 184-ish, somewhere around there,
Okay.
183, 184.
Okay.
And bigger picture-wise for gold, if I go here to the monthly, we remain bullish. This is a little jumbled up,
Yeah.
but we should soon, if everything is correct, launch into a third of a third wave. That we
Okay.
bottomed out here for a fourth wave, most
Right.
likely. I believe that was 2021, 22 for this fourth wave. And we're now in the starting gates of a new bull market, unless the whole market decides to move this wave
Tank.
for tank.
Yeah.
Because so far we're
They
still
have
on wave three.
a liquidity event.
Yeah. But
Uh,
that's what
can,
stop losses are for.
can I ask you a question that no one's been able to answer? I look at things like AG Majestic. It's a silver mining company.
Uh-huh.
And during COVID, um, it traded down to 420.
Mm-hmm.
And at that time, silver was 11, $12 at the bottom in March of 2020.
Mm-hmm.
And silver's trade at $22, a full $10 above it. And a lot of the miners are approaching their COVID lows. Do you know why?
Yes. No, I have
No
no
one can
idea.
answer that. Yeah,
I,
me
I'm
either.
it has to do probably, if I may answer, it's a small, most of the time they're small cap companies, maybe because they've been
Uh,
struggling a lot, or it's a
Maybe.
pretty large company.
I don't think it's small cap anymore, but
Okay.
yeah. I mean,
No,
it's not Agnico Eagle, but AEM has a much better. But so it could be that it's small cap.
could be because I noticed it myself as well that gold miners are all the way here at the bottom
Yeah,
of its range, the last 2 year range. They're at the bottom, and gold is all the way up here. If
yeah.
you do
That's what I mean.
normally gold and
They'd lead.
silver, they lead, and the miners kind of follow in a rather similar wave count, and they're not. They're really at the bottom of the range. So that is really interesting. So they have a lot of
Yeah.
catching up. If gold starts rallying, they have a lot of catching
Okay.
up.
All right.
That's all.
great presentation, Arnaud. I
Thank you.
appreciate it. We
Great
all
questions.
appreciate it, my trading
You're
warrior
welcome.
brother.
You're welcome.
And good hunting. I hope you have a great 2024. You and all of your subscribers. Hope it mushrooms for you.
I hope so
And
too.
look forward to talking to you in the spring.
Sounds good.
Okay. So
Alrighty.
Arnaud Tersher, follow him at Intel_investing on X and
Yep.
check out his work. He gave you
Thank you.
just the tip of the iceberg here. More
Oh
than
yeah.
the tip of the iceberg. So thanks again, buddy.
Oh, you're welcome, my friend.
All right. So that's a wrap, everyone. You could join the team in 12 minutes on the morning edge. Good hunting today. Watch that 103.80 area in the dollar. If it holds, we're going to 105.80. Just a guess. So that's a wrap. See everyone tomorrow. You're welcome. You're welcome. Arnaud, people are thanking you. And adios. Don't just count your pips, count your blessing. Okay, Marty's explaining why the juniors. Okay. See everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.